So again, my name is Raghee Horner. I'm the Chief Currency Analyst for IBFX, and today we're going to be talking about learning how to filter a long list of pairs into a watch list. We're going to use our platform. For those of you that attend any webinars with me, you know that I am a huge fan of just diving into the platform, looking at live charts, looking at live price action. So this is a current view of the Aussie loonie. So one of the things that I want to kind of show you right off the bat here is the list of pairs that I look at. So starting off with the Aussie loonie there at the top and all the way down to the Aussie yen, all the way at the bottom, or I'm sorry, Aussie yen, dollar yen, all the way down to the bottom. These are the pairs that I'll look at on any given day. Now, some of these pairs are pairs that I look at based upon my interest in them. Some of them are based upon articles that I have to write or questions that I get from doing the chat room that I do each morning. Some of it might be simply just curiosity and so forth. So they're all not necessarily pairs that I will trade on a regular basis. For instance, I'm not a huge fan of, say, trading the euro pound, or I don't trade the Aussie kiwi all that often. Okay, you'll see there's pairs like the euro here, krona. I don't know how many people have ever looked at that. Some of these pairs are just pairs that I've looked at in the past, so they're on the list, but they're not necessarily trading pairs. Okay, so I don't want you thinking every one of these are pairs that I trade actively. I'd say maybe a little less than half of them are. Okay. So moving on, I'm not saying you need a long list of pairs to consider, but I will tell you that here's a typical error that a lot of new traders make is they may focus on a couple popular pairs. For example, they might focus solely on the cable, the euro US dollar, and some other very active, very volatile, high-flying type pair. Whatever might be in the news that particular day, or whatever might be just on the move. Okay, so I find a lot of new traders will somehow find themselves looking at anywhere from sometimes 3 to 4 pairs, and I don't always find that to be the most effective thing. Now, for those people who think they should be looking at just one pair, I absolutely do not recommend doing that, because I find that because we're sitting in front of our computers and because we think we should be doing something with one pair, you will inevitably force a trade. So don't squeeze yourself into one pair. So a watch list is exactly that. It's a list. Okay, and for me, my lingo is things that are on my radar, which is to say I'm watching for a potential entry. So I might have a set of price action that has my interest and my attention, but I haven't gone so far as to put a order in the market or even open a trade. So the radar is my watching it, and then I have my pipeline, which is kind of the active pairs. So I either have pending orders or actually an open order. So that's the pipeline. So we're always looking to take something from the radar to the pipeline, and that's always the point. I don't want to force things into the pipeline, but that's the way I look at my day. So I have my watch list, pairs that I'm watching, and then I kind of have my action list, things that I'm actually doing something within. So when you hear me refer to radar and pipeline, I'm just basically talking about my watch list and my action list, respectively. Typically, a pair, unless it's a very short-term time frame that has suddenly developed a setup very quickly and I want to act on it right now, typically pairs will start on my radar and then get on over to the pipeline, but not always. That is not always the case. And again, if you have any questions, type them in as we go along. If I lose anybody on the lingo, like radar, pipeline, and any other word that's kind of unique to the way I look at the market or describe the market, go ahead and type in the question, and we'll take it from there. Do I use the same template for all the pairs on my watch list? Brad, yes. Thanks for your question. Brad, I absolutely do. I use the same template. The only variation is actually an addition to my wave, my grab candles, my 20, 50, 200 period simple moving averages. You'll notice that on the daily, sometimes I'll throw this orange moving average, which you see here. The daily, of course, is the chart in the upper left-hand corner, and I'll throw this orange moving average on there, which is the 89 period exponential. Okay, so that is typically the addition. So thank you for that question. So moving down into that conversation, kind of continuing on with that conversation of I don't want you having such a limited list of pairs that you feel the need to force something. Oftentimes people ask me, well, how do I know what to even look at? The easiest thing I think to do is, if you have a manageable list, and you really should have a manageable list, you shouldn't feel like going through the entire list is a chore. I've often felt that it probably would behoove me to remove some of the symbols on my list that I haven't looked at in a while. So I wanted to actually wait till tonight to do that with you all. I've been finding that there's a number of pairs on this list that I simply am not trading, and I can always add them again. And I think it would be a good idea from time to time to clean your list up. Look at pairs that you haven't been trading and take them right off the list. You can always add them again. I don't want you intimidated. I don't want you feeling that every one of these has to be inspected if you have no intention of trading them. For example, I could probably, and this is some of my personal baggage / bias. Okay, I don't always want you getting all my habits. Some of them are bad. Okay, but for example, I'm not a big fan of pound sterling pairs. I simply have never been a big fan of them. I think the rhythm of the pound sterling is often very much its own. I actually call the pound sterling the drama queen. It's not one of my favorite pairs to trade. However, I do find myself many times just piling into the Aussie. I do, for better or for worse, trade the Aussie quite a bit. And I was doing some accounting, I guess you could say, some kind of year retrospection, looking at my activities throughout 2012, and I've noticed that a lot of my activity this year has been in Aussie pairs. They've been by far some of my biggest winners, and actually, based upon the activity, they've been some of my biggest losers too. Okay, so the pendulum kind of swings both ways there, and I find the Aussie's been something I've been very active in. So even though I have the pound up there, it's not necessarily something that I trade a lot of. I enjoy trading the loonie because I also like trading the crude oil relationship. I like trading the yen quite a bit because of its very unique way in which it's used to it reflects, I should say, what's happening in the risk environment. In other words, for those of you that like to trade futures and look at things like the Dow and maybe the U.S. dollar index and what the risk environment is like, is it risk on or risk off? The yen is oftentimes a great pair for that. So like Aussie yen, Euro yen, dollar yen, oftentimes I like to go to those pairs as well. So clean your list up from time to time. Don't feel that it has to continue growing as you continue with your trading. You'll find yourself looking at smaller lists, longer lists as the year goes. So clean it up from time to time. We just did that together. So a lot of people ask me, well, do I just start from the top and go to the bottom? What I will tell you, don't always do that, because you'll find that sometimes you'll take a lot of time with the top third and you'll start rushing through the rest of the list. It's easy to take too much time. So what I would tell you is head on over to an economic calendar like the one over at Forex Factory and let the calendar help you decide what may be in play on a particular day. This is one way of doing it. Another way of doing it is you can head on over to a news source like Bloomberg or Reuters and look at what pairs are being discussed. You can look at say, news.google.com and do a quick search for the euro, do a search for the Swiss franc, the Canadian dollar, some of the majors and com-dolls that you watch, and see what kind of news is hitting those. So I'm not saying be a fundamental trader. We're talking more about a scan of psychology. Okay? We're talking more about a psychology. So if you don't want to necessarily go through 5 or 6 individual searches on, say, Google News, and you can, in addition to the calendar at Forex Factory, you can look at some of the latest news. What is some of the latest news that's on the Forex Factory homepage? What's being discussed? For example, here we have a discussion about the dollar-yen. Here's an article about Greece. Oil falling. Euro-yen. Actually, I wrote that one. Then Fed member Fisher. What's keeping the Aussie aloft? That's a great question. Aussie's been quite strong. Another conversation about the Euro-yen. Okay. So what are some of the more popular conversations or articles or what are the more active headlines here on Forex Factory? That's another way of looking at it, to narrow down your list. Or if you have a very manageable list and you have a way of getting through it quickly, just go through your pairs. And maybe you go through them, do one for the top, then do one to the bottom, so you don't find yourself wasting too much time, or I shouldn't say wasting, but spending too much time on the top half of your list and slowing down towards the bottom. Those are oftentimes very basic mistakes. I even find myself doing that from time to time. So what you want to do first, what you can do first, is do a quick scan whereby you make a couple very fast decisions. And this is, in many ways, the initial filter. If you think of your watch list as more of a funnel, where the mouth of the funnel is quite wide, and then as it goes through the funnel it becomes progressively narrower. Well, think about the wide part of the funnel first. What's a very broad, very basic filter? Well, one of my filters is to look at the daily and ask myself if the daily is moving higher with either a 12 to 2 or 4 to 6 o'clock wave. Now, some of the conversation we're going to have here tonight is going to kind of assume that you know some of the basics about the way I trade, that you've been attending some of these webinars, or at very least gone to YouTube and seen the way I trade. If you do have some basic questions, feel free to ask them. I'll at least direct you to where you can get some answers, but I don't have the time to break down all that here tonight, okay? When I talk about 12 to 2 o'clock angle of the wave, it's a pretty easy assessment. I mean, I'm really simply talking about acting as if you have a clock face on the chart and pretending to kind of have a 12, a 3 o'clock, and 6 o'clock. So imagine putting 12, 3, and 6 right on the face of the chart, and then asking yourself, what angle does the wave point at? The 34 EMA, high, close, and low. What does it point at? What is the direction of that? Now again, if for some of you if this is a little too advanced, or if we're using tools that you're not used to using, please let me know. I'll be more than happy to direct you to where you can get some free video explanation. A lot of it's over at the IBFX channel over at YouTube. So the first filter is oftentimes what I call my directional bias filter. Do I have a trend on the daily? And that's all that directional bias is. A lot of times traders will wander into charts where there isn't a dominant psychology, or they'll not respect the dominant psychology. These are habits from really my day trading, my equities day trading years, where I would like to know what the daily chart of any stock I was trading. I'd want to know if it was trending higher or lower before I even got into something as short term as a 3 or 5 minute time frame. Okay, so some of these are habits or strategies that I've been using across other markets that I traded before I traded the Forex market. So this is less about Forex specific analysis and more about the psychology of the market. Does the Aussie Loonie qualify as a trending time frame? is the wave heading up at 12 to 2. I do believe it is. So I often have a number of columns. I have oftentimes a DB column. I'll have a 200 DMA column. And oftentimes I'll have what I call a transition or fresh column. And we'll describe each. But would this pair make the DB column? Yes. So the Aussie Loonie would go into the DB column because it does have directional bias. Now, the DB column is the number one column. That's your best column. Number 2 would be the DMA, the 200 DMA, the 200 period simple moving average. And number 3 would be that transitional or fresh column. So in that order, they really are, to me, in order of importance. So let's go to the next pair. I'll just go to the bottom of the list, dollar-yen. And the dollar-yen, when I look at the daily time frame, what do I know about the yen right now? And this is where understanding some of the fundamentals that are moving the market make a huge difference. We only see this type of yen weakness. This is a weak yen. We typically only see this kind of yen weakness, where we see the dollar-yen moving up higher, when there's usually what? Risk appetite. When the Dow's doing well and the US dollar is actually moving lower. So what I have here is a weak yen. So anytime I see the dollar-yen moving up higher, I'm asking myself, well, is that the dollar moving stronger, or strengthening because of risk aversion or fear, or is that the yen weakening because of a lot of enthusiastic, optimistic equities, risk on, risk appetite, greed, however you want to look at it. Okay? So when I see the dollar-yen moving up higher, that could be dollar strength and or yen weakness. Now, what's interesting about the yen weakness right now, and we have to talk a little bit about the dollar. These are kind of pertinent to now, the environment now and the end of the year. There's a lot of political unrest in Japan. Prime Minister Noda has come out and said that he's okay with the dissolution of the lower parliament, and that would trigger automatically an early election in Japan. Polls in Japan show that Noda's party may not regain control. And the expectation is, and I believe it's the Liberal Party of Japan versus Noda's Democratic Party of Japan, the expectation is if the Liberal Party wins, there'll be more monetary easing type policy, which would weaken the yen. Not to mention the fact that it's not like Noda hasn't been fairly easy on monetary policy, but the expectation is the other party, if they win, would also be. Now, what's interesting is in times of stress, the yen doesn't necessarily weaken. When you look back to the last really stressful time for Japan, back when they had the tsunami and then the subsequent nuclear disaster and that entire tragedy that unfolded, if you guys recall, the yen was strengthening. So when there is unrest, don't typically expect the yen to weaken. A lot of times it does strengthen. Okay, so we know there's a set of fundamentals that are moving the yen that have nothing to do with the equities markets here in the U.S. And that means that the yen weakness is very much a part of that political issue in Japan. And we know the Dow has been struggling. Obviously, the fiscal cliff issue. I have to mention also, it looks like, and I've been writing down in my journal some ideas about what I think the Dow and dollar are saying. The dollar's suffering with the Dow. We can include the S&P into that as well, the closer we get to the cliff. So we might see dollar and Dow weakness going into this fiscal cliff psychology. So when I look at the dollar-yen, I have to remember that I'm dealing with a very prickly fundamental situation. Is this really a trend? It's moving higher, there's no question, but is this really a trend? No, it really isn't a trend. It's been moving in kind of stops and starts and fits, accelerating quickly and then just kind of consolidating. But I don't want to short this market unless I have a nimble, near-term, say 5-15 time frame. But when I look for clarity, would this make the DB list? No, it wouldn't. Is it north of the 200 period simple moving average? Do we have a very clear view of this market's reaction to the 200 period simple moving average on the daily? Yes. But if I do put the dollar-yen on that 200 DBA watch list, 200 DMA, daily moving average watch list, put an asterisk next to it and remind yourself there's a lot of political unrest and therefore uncertainty, which has then translated into, as you can see here, the yen weakness. So, gang, we're talking about charts, but one thing that I find a lot of chartists or technicians don't do is they completely bury their head in the sand when it comes to fundamentals. Now, I haven't always been as interested in fundamentals as I might be now in my later years as a trader, but time and experience have taught me that yes, while I build my trades with primarily price and secondarily technicals, I'm a chart hacker. Okay, that's the way I look at myself. And that means I have to respect all three types of, I guess you could say, analysis, but all three types of analysis potentially have an impact. We break through a particularly important psychological level like parity. That's price action. We break a 200 period simple moving average, or the 50 crosses the 200. That's technical, but it is impactful. We have fundamental data or economic data that's moving the market. We have to respect it. We can't ignore any of it. Okay? We can't ignore any of it. I'm not saying you need to look at all the technicals. I'm not saying you need to look at all different types of price patterns. Or I'm not saying you need to become a fundamentals expert. But you do need to understand what's moving a market. And oftentimes you're going to find it's one of those three things. Fundamentals don't always move a market. I think a lot of fundamental traders seem to think that's always the driver. I don't find that always to be the driver. Sometimes there is price action, order flow type momentum that could be moving a market in the near term. Sometimes fundamentals come and go from a market. Don't think there's an organization to it. The market can choose to ignore something for one session and decide to adhere to it the next. So it's not always a very organized discounting of fundamentals, but you have to understand what's moving the market. Economic calendar, scanning the headlines, these types of things will do it. So I don't want you thinking that just because I'm talking about that whole situation in Japan, that somehow my trading is going to be completely based on the fundamentals. No, no, no. But any trader has to be aware of that situation. All right, let's go to the Aussie Swissy here. Does the Aussie Swissy have directional bias? Do I have a trend on the daily? This chart in the upper left-hand corner. I do not. However, is the 200 in play? It actually is. Most recently, around the, looks like this would have been the 26th of October, 29th of October. You can see the resistance at the 200. And then most recently, you can see the support. So resistance back late October, support here in mid-November. There's respect for that level, and the 200 is in play. So that's where, if I wanted to, the Aussie Swissy could make the 200 DMA, 200 daily moving average list. Okay? And again, remember, I prefer the DB list. I would rather have pairs that had trends on their daily time frames. And by the way, there are a lot of pairs that are right in the mix with their 200 period simple moving averages on the daily, that DMA. A lot of pairs with the 200. Take a look at the dollar Swissy. Do I have a trend? No. Is the 200 in play? As resistance, it looks like. I mean, it's very close to current price action. If you have a 200 DMA close to current price action, you have to respect it. So, again, what I'm doing is I'm going through each list and then just kind of qualifying which type of watch list does it actually qualify for, and then I can prioritize after that. The main priority being that directional bias. Aussie yen, it's not pretty, but it is heading up higher, so I could put the Aussie yen on that DB watch list. Okay? What about the dollar loonie? Is there clarity? The dollar loonie is running in, doesn't have, not only does it have a trend now, an uptrend, but it also is dealing with the parity level. That's a major price-based, it's a price-based level. It has nothing to do with the technicals. Parity is that major quadruple double zero level. $1 US for $1 Canadian dollar. There is no more psychologically impactful a number on a Forex chart than parity. So I've got parity in play. I've got the 200 DMA in play in the same area, and I've got an uptrend. So I could put the dollar Canada on both lists. That makes it pretty, it's a pretty important thing to notice. There's a number of reasons why traders would be watching the dollar Canada. And it looks like parity might be support right now, interestingly enough. So the dollar loonie is a pretty interesting pair right now. Aussie US, and again, I'm just going down the list here. Clarity on the daily? No. Is the 200 in play? No. This pair, the Aussie US dollar, wouldn't make any list. I'm not interested in it at all. It's not on any of my lists. It's not on the directional bias list. It's not on the 200 DMA list, nor is it on the transitional or fresh list. That's my least favorite list. Kiwi, not even interested. Trend, no. 200, too far away. Although it might get there, and when it gets there, it'll get on one of our lists, right? Likely the 200 DMA list. But for now, it remains. So, your point here isn't to make sure that every one of your pairs makes a list. That's not the point. Your point here is to make sure that some pairs do not make a list. Even though I've given it 3 different ways to try to end up on my radar potentially, and then eventually into my pipeline, I don't want to force categorizing these pairs onto a list. Like, for example, here's a loonie yen. If we were looking at this 1, 2, 3, 4, 5 days ago, when we were doing battle with the 200 DMA here, I would probably have put in it, I would have made the 200 DMA list. Today, we've launched from it. It's not in play right now. We don't have a trend. It's not transitional. There's really nothing remarkable about this pair right now in terms of its daily. So, yes, a handful of sessions ago, it might have ended up on one of my watch lists. I'm pretty sure it would have ended up on the 200 DMA, but not today. Here's another pair. Here's the Swissy yen. I'm sorry, the Swissy yen, the Kiwi Swissy, the New Zealand dollar Swiss franc. We're close to 200. We're not actually doing battle with the 200. I could maybe put it on the 200 DMA, but we're not quite there. And again, it's not about making sure I put a bunch of names in my watch list. It's really about filtering things out. Okay? Too many times people want to filter things in. They want their pipeline chock full. I would rather cherry pick a little bit more. So maybe tomorrow, maybe Monday, maybe Tuesday, the Kiwi Swissy is going to end up on a list, likely the 200 DMA. But today, not so much. Swissy yen. Does it make a list? No. Much like the loonie yen, a few days ago it probably would have. Today it does not. Now, if there is something about it that is catching your eye, like, for example, some of you, I look at the Swissy yen and say, yeah, you're not dealing with the 200, and yeah, you're not really trending really clearly. You're chopping, but gosh, are you making a double top here? That's kind of remarkable. That's something to make note of, and you seem to be sinking back down towards the 86 level. Well, that doesn't mean I'm going to trade you necessarily, but maybe I'll just jot you down, and next to the pair, I'll write down double top daily chart. Doesn't mean I'm going to trade it, and it's going to really kind of be on the fringes of my list. Like, for example, it's going to be kind of on that number 4 list where it's just something random. In this case, I have a Swissy yen double top. So I can just jot that down in my journal, so I have it to look back on. So that we move on to the Kiwi Swissy. We already looked at this, sorry. We can move on to the pound. Okay, pound US, the cable. Anything remarkable going on here? Well, both the pound US dollar and, while I'm at it, the pound yen, both these pairs have been dealing with, as you can see, the 200. But notice, a handful of days ago, I looked back on my journal, it was just going back to the 12th. On the 12th, I had both these pairs battling with their 200. Neither one could establish a whole lot of momentum below them. That means there's still a certain amount of bullish intensity and attention as we are above the 200. That yen news regarding the political unrest, I guess you can call it unrest or political, I don't even know what you want to call that. But the yen weakens sharply, launches off this 200. The pound yen really isn't in play in terms of any kind of opinion I might have about the daily, but the pound US, the cable, can go on that 200 DMA list. So again, a handful of days ago on the 12th, the pound yen was the 200 DMA list, as was the pound US. Here we're still doing battle with it on the pound US. So, by the way, it's pretty clear to see that when you look at how quiet the pound US still is and how the pound yen is launched, you can see just how much the yen weakness has affected a number of pairs. This move has really nothing to do with the pound sterling and everything to do with the Japanese yen. Okay, that brings us to the Euro Aussie. The Euro Aussie has traded up to the 200, so I can put that on my 200 DMA list. It also is arguably transitioning, giving us an early look, maybe. This might be a little generous, but it might be giving us an early look at what I would call a transition to a fresh trend. So I could put it on that number 3 list where it's been empty till just now, put that Euro Aussie on there. That Euro Aussie is trying to give me a downtrend. And quite frankly, if the 200 holds as resistance and we stop putting in these higher highs and we start to get some selling pressure kicking in, this fresh, young trend, this trend that's trying to establish itself, might actually have a chance. So it's on 2 lists here, the 200 DMA and that transitional fresh list. Because the 200 period simple moving average is overhead, I really am not going to commit to longer term time frame buy entries. Uninterested in that. Okay? Alright, so again, I just want to show you as I go through each one of these lists, I'm making some decisions. Pound Kiwi, uninterested. Daily has no trending clarity. The 200 DMA is not in play. There's no fresh trend. Nothing. Nothing. Just move on. Just move on. Euro Loonie. I was actually in this pair earlier this week. This was actually a great trading pair for me. I was short this pair as it was trading below the 200 period simple moving average. We've actually gotten back above it. We were trying to take this break of the 200 and maybe develop it into a transitional market where it was starting to look like that fresh downtrend, but completely lost it. So I was interested in it earlier this week. Actually, I believe I was in it into the weekend last week. Yeah, I was in it on the 9th, watching it on the 8th. Short sells on the 240. Not in it right now. The thing that I liked about it was south of the 200. It was doing battle. It was having resistance. And so I set up short sales based upon that. Now it's not even on a watch list. So what a difference a few days makes. Okay, what a difference a few days makes. So that 200 DMA, that 200 daily moving average, the daily moving average on the daily time frame, made a huge difference in terms of why I was in it earlier this week and now why I'm uninterested. So again, that could have been on that DMA list earlier in the week, but it was part of why I was in the trade to begin with, but now not interested at all. So moving through the lists, let's go to and I talked about the pound yen already. I'm not interested in this pair now. Again, earlier it was doing battle with the 200 DMA, but not anymore, so it's not on my watch list. And by the way, can you rebuild a watch list every day? Could you do that? Yes. Could you do it a couple times a day? Depending upon the price action, sure. Sure. You know, the 200 period moving average on the Euro US was in play for the better part of the end of last week and this week. We actually have just launched above it now, and that completely changes the sentiment and the opinion of this pair, because when you get above the 200, I'm not saying everything is bullish and everything's roses now for the Euro US, but it is a very different stance to be above the 200 when you're in close proximity to it than when you're below the 200. Is it in play right now? No. It may be tomorrow, in which case, if we're trading closer to the value of that 200 period simple moving average on the daily, I could go ahead and put it on that watch list. But one of the problems I'm having is my directional bias watch list is very thin, and my 200 daily moving average watch list is quite heavy. That's the number two. It's not as good as having a trend on the daily. It's number two. Remember I said we have three types of lists: directional bias, 200 DMA, that transitional fresh, and then just kind of the random, double top here or triangle there or Fibonacci retracement, random things that would end up in kind of a number 4 miscellaneous type of list. And that is in order. I would prefer to trade charts with the directional bias. Second to that would be charts that are dealing with the 200. Then would be charts that are transitional or looking at a fresh trend. And then finally we have that miscellaneous list. Okay, the further down that 1, 2, 3, 4 we go, the less interesting that pair is to me. Okay? All right, so let me go ahead and start to wrap up our conversation here by tackling some of the questions, and I hope you could see how I make some of these decisions on a regular basis. Much of my trading over the past few weeks has really been based on the 200 DMA, because that's what's been most actively in play. And I'm not saying that's a bad way to go. It just isn't as good as having directional bias. And by the way, it's been very volatile. And I won't tell you that it's been a very easy month. There's a lot of volatility. Fiscal cliff, this new drama coming out of Japan. We had the election to deal with. I mean, there's a lot of drama. So there isn't a lot of clarity in the market. We have a lot of volatility, a lot of sudden moves, a lack of organization. So it's been a challenging month. Okay, so let's tackle some questions here, and we'll start wrapping up our discussion for the evening or the morning, or whatever time it may be wherever you are. Okay, so how do I manage to put daily, 4 hour, 1 hour, 30, 15, and 5 on the same screen at the same time? I've just built templates. This is Kay Morgan's question. I actually just built a template where I've just opened 6 new charts and sized them and created a single screen for them. That's what I've done. And then I create a profile every time I do that. So I open up 6 charts. I put whatever studies I want to put on them. I have them all the same symbol, as you can see. And then I go into the profiles and I save the profile. So really what I'm doing is I'm jumping from pair to pair, is creating a new profile for each pair. And I have those same 6 charts set up the same way, same template, so I can jump from chart to chart. So those are individual profiles. Okay, so thanks for that question. So yes, Nelson, when we're talking about the yen, and whether that be looking at the euro yen, whether we look at the dollar yen, or whether we look at the Aussie yen, we see yen weakness across the board. Absolutely, absolutely. So for most of the yen pairs, I can't think of an exception. The yen is the driver of the movement. A lot of people think that both pairs have to be moving to move the pair, both currencies of the pair. Each individual currency doesn't have to be moving for the pair to move. Sometimes one might be flat and the other one's very dramatic. Sometimes they both are moving. But in the case of the yen right now, absolutely, the yen is the driver and sometimes the sole driver of the movement in the pair. Absolutely. Okay, what about the pound and Aussie, the pound and the euro Aussie 2 days ago on the daily? This is Carrie's question. The pound Aussie and the euro Aussie 2 days ago. So 2 days ago we were heading down lower and we reversed. So I guess you're asking why the resiliency in the cable suddenly, or why the weakness, might be a better way of looking at why the weakness in the Aussie suddenly. You know, the best way you can gauge that is a combination of and if this was 2 days ago, the first place I'm going to look for signs, Carrie, is going to be the economic calendar. That's the first place I'm going to look. So was there anything going on the 13th, or even going on coming out of the 12th, that would have changed sentiment for the Aussie? Is there anything that would have made the Aussie suddenly start to re-strengthen? Okay. Obviously, you can look for any sign under the euro and the pound sterling as well. That's the first place I would look. If I don't see anything that catches my attention as to why there might be some sort of sudden reversal on the daily, maybe it's not the Aussie, maybe it's the euro. Again, look at the economic calendar. Then I would go look at the headlines. So I'll look up the Australian dollar on Google News. That's the second part of what I would do. Okay? A huge part of what happened on the 13th, however, was the rumor, if you all recall. And this is why it's so great to have a journal where you take notes of what you observed that day. And a big part of the price action on Tuesday was the market psychology surrounding the euro, specifically with that early morning rumor rally in the euro based upon the Greek aid 44 billion euro package. If you guys remember that was a big part of the euro rallying. Suddenly people thought, yes, it was approved and a done deal. The Greeks were going to get that 44 billion package, if you recall. Now, what was interesting is the euro was rallying despite a huge miss in the German ZUI, the ZEW, huge miss in that number earlier that morning. So the data coming out of Germany was terrible, but there was this rumor that the Greeks were going to get this money, and the euro just took off. So that was the big part of Tuesday. I have notes here, and I'm pretty specific about my notes. By 8:45 a.m. Eastern on Tuesday, and again, this is Carrie's question about what made the euro move or even the pound move. I don't have a lot of data surrounding the Aussie here. I think most of my notes here are very much euro-based. That by 8:45 a.m. Eastern, the euro pairs had actually given back about half of the rumor rally, and by 9:15, just a half hour later, on, for example, the euro-US, it had taken all of the rumor rally back. Okay? So I don't see a lot of notes here that pertain to my making any kind of observation about the Aussie being a driver. I think in this case it could have been that Greek rumor rally. Okay? So sometimes it's going to have to be things that are maybe not on the economic calendar, but that are fundamentally shifting psychology. Okay, so thanks for that question, Carrie. All right, let's see. Another question here. Do I trade the 1 hour chart, the Aussie-US, because the daily is lacking directional bias, or is it tradable? Aussie-US, do I trade the 1 hour? Well, if the daily directional bias is hideous, and this is about as ugly a daily chart as we have right now, does that render, and Andy, to your point, does it render the rest of the time frames kind of irrelevant? Well, no. Even, what I got to ask myself, though, is, do I really want to spend time looking at a pair where there isn't a lot of clarity? If you're interested in playing a particular economic release, or you think there's a piece of news that you think you've got a good play on, that's one thing. Still, I don't think that overrides the fact that there's not a lot of clarity on the daily, so I'm not going to put a lot of time into trying to determine if there's a way I can trade the Aussie-US when I know there's other ways that I can trade the Aussie with directional bias in the Aussie-Loonie or the Aussie-Yen. So don't force a trade. But strictly speaking, pertaining to your question there, Andy, could the 1 hour be traded? It is at a nice swing angle. It is the cleanest looking time frame of the current view of these charts. it is the exception to my shorter term time frame rule when the daily's in chop. So I guess yes, strictly speaking, yeah, we could look to the 1 hour for an entry. Yes, if I wanted to take advantage of Aussie weakness against the dollar, this would be the way. But I will then at the same time ask myself simultaneously, if I want to take advantage of Aussie weakness, can I also do it maybe better on the Aussie loonie or the Aussie yen? If it's something strictly on the Aussie US and I have to take it, sure, with my back against the wall, I will say yes, the 1 hour is a viable chart to look at, but I'm not sure I like anything on this pair, and I hope you can see kind of the balancing act there. Okay, so yes, to answer your question, Andy, great question, great eye, good swing environment there, but gosh, that daily is ugly, I have to say, and it just, I have to think there might be a better way to trade the Aussie than against the US here. Let's see. Do I find any particular oscillator that seems more fitting than others? For Forex, Brad, no, I use specific indicators in specific market trends. For example, if I'm looking for momentum, I'll focus on, say, MACDs for overbought, oversold. I'll look at a stochastic. For trend reversals, I'll look at a CCI, but I don't want to stray too far from our topic here. But yes, I actually have a number of indicators I look at, but each one that I just mentioned has a specific market trend that I use them within, a specific market trend that I'm interested in looking at their opinion. For example, if a market's trending, I really could care less what a stochastic has to say, right? But you did mention oscillators, so in terms of oscillators specifically, and I think you said oscillators, right? Yeah, so in a choppy market, I do like a stochastic. That I do. And in a transitional market, where a market's going from a trend to possibly a reversal, I like a CCI. Okay, but those are secondary tools. They're not the primary decision driver. Okay, David asks, once I've created my watch list, what do I do with them? Do I look at smaller time frames? And that's a huge question, David. I mean, obviously, the questions you guys have coming here today are fantastic. I mean, I could spend the next 4 hours answering them because it really starts to encompass everything that I do as a trader. But that's a terrific question, David. So once I have a list and I could prioritize what I like best, then yes, I start to dive into the daily. I start to dive into all the time frames, and I look for market clarity. That's what I'm always looking for. Which time frame is telling the story best? And ideally telling the story best where the daily time frame has a trend, and ideally where that intraday time frame is moving in the same direction as the daily. So that's what I'll start looking for, all those little nuances. Where is the clarity the best? Where do I have continual green or red grab candles? Where do I have a nice, smooth, established wave? Where might there be psychological levels in play? That's when we start looking at all the little nuances. But ideally, I'll start with that directional bias list, which, again, is very short. Personally, I've been working a lot on the 200 DMA, in some ways to somewhat disappointing results because of the choppiness that you have in a non-trending pair with a non-trending daily time frame. But if I have a DB, I'll go with those pairs first, which means prioritizing right now Aussie loonie, Aussie yen, Aussie dollar loonie, and looking for clarity on those time frames, 5, 15, 30, 60, looking for which one is telling me the best, clearest story. Okay? Market clarity. Thanks for your question, David. Terrific question. Using Fibonacci, where should price be in oil? Okay. Thank you for your question, Yaguba. I hope I pronounced your name right. That's just, tonight it's really off topic. If you wouldn't mind, I just don't want to get too off topic here. We do have video on Fibonacci in the Interbank FX videos section over at YouTube. So I hope you'll forgive me. It's just super off topic here. I would have to really get into a whole discussion on Fibonacci, and quite frankly, that merits its own webinar, to be honest. The settings, the tools that I all have over at the Interbank FX channel, Ed, this would pertain to your question as well, my friend. Definitely the videos that are there cover my setup, my chart setups. Yes, absolutely. Jim, to your question there, yes, all these will be available. This video will probably be available I'm guessing probably by the weekend or maybe Monday latest over at that aforementioned YouTube channel, okay? Actually, I think you were maybe answering somebody else's question. So if you're helping me out, thank you there too. Okay, let's see. I like the idea of a filter list. The thumb on MT4. Oh, okay. So I like making little notes to myself. If you want to insert a thumb or an arrow, just go to the shapes, go down to insert, go to the insert heading, drop that menu down, go to arrows, and you can see all the little cool things you could draw all over your charts. Okay. Am I using EMAs on this chart? Yes. If anyone's interested in the moving averages that I have, at first it could seem very busy. I do agree. I do understand that. My eyes kind of focus on what I need to focus predominantly. I know a lot of traders, when they're just getting familiar with my wave, what they'll often do is they'll thicken up the lines of the wave specifically just to kind of differentiate visually their importance versus the importance of the other moving averages. Okay, that's one way of doing it. Okay, so yes, I have a lot of moving averages on there, but my eyes now automatically kind of compartmentalize, and I look at the wave and I can kind of ignore everything else, or I'm looking at my grab candles. I do acknowledge if I was a new trader looking at this years ago, I probably would have gone, what? I agree. A lot of new traders will simply use my grab candles and they'll forego the wave. You know, if something is distracting to you, you don't have to take it off your chart, okay? But what I will say is you can make your chart a little easier to read. So what you could do is perhaps make the, let me show you what I'm talking about here. What you could do is make the colors just less distracting. So maybe in the very beginning, as you're getting used to the grab candles, you might turn your wave just white, just get it out of your sight. And that's fine, you know. Maybe you just want to look at the grab candles. So you clean your chart up. See how much different that looks? All I did is I went into the indicator and just turned the red, green, and blue into just white. So now I've got my grab and my 20, 50, and 200 DMA. If you want to clean it up even more, you can go into each individual moving average. Again, I'd rather you don't delete them, because eventually I want you to look at all of them, okay? So you could look at each one and leave the 200 on there. I mean, that's pretty simple to look at, right? And there's a grab candle. So you have a look at momentum, bullish, bearish, and neutral momentum, and a 200 period simple moving average. Okay, so you don't have, if it's confusing, take baby steps into each one. You know, maybe you'll look at the 200 and the grab candles for a while. Okay? Again, this 200 is just a 200 period simple moving average. Maybe you'll add in the 34 EMA on the close, so you have the middle line of the wave. You know, I don't know what's going to be comfortable for you, but you can find it by just kind of making those lines invisible for a little while. And all I did was turn them white. So they just kind of sink into the background. And when I want to bring them up, I'll change their color again. Okay? All right. So let's see. Again, I appreciate all your questions here. Thank you so much. Let me just make sure I can get through as many of them as I can. If there's content that's available at the YouTube channel, I'll direct you there. If you have questions, technical questions about setting up the charts, if you guys don't mind, I'm just going to direct you over to customer service, because if you want to set up a multiple chart layout, I mean, all you're really doing is going to File, New Chart, and you're doing that 6 times. That's all you really are doing. You go to File and New Chart, and you do that 6 times. Once you've got 6 charts, then you just kind of arrange them, and that's all I did. I arranged them here. Now, unfortunately, on this platform, at least for me, I've never got the tile horizontal or tile vertical to give me this particular look. So I had to manually go in and shape each chart so they're the same size and fit in this area. But once you've done that, create a profile and save each of your pairs in that way. So again, just go to File, get a new chart, do it 6 times. You'll have 6 charts, and then you just got to manually shape them. Okay? That's the best I can tell you as far as doing that. All right? And it is a little cumbersome the first time. All right? But just open up 6 charts, and that'll get you started, okay? All right, let's see. I think I got to the EMA. So EK, I hope that works for you. You know, just kind of maybe make the charts a little bit more clear in the beginning, you know, clear, by just erasing them in a way, by just making them white, or whatever your background is. If your background's black, make the indicators black. On the white background, the white tends to be a little less obtrusive, obviously. So I think it's a little bit more forgiving there when you want to kind of erase them for a little while. Hello, Jason. How are you? I am doing well. I appreciate that. Wondering what the light gray... Okay, those are the 20, the 50, and the 200 period simple moving averages. 20, 50, and 200. And if anybody does have any questions, and Jason, you too, feel free to drop me an email. This is my email address. Feel free to drop me an email. And there it is. Okay. All right. I'm just going to ask the last couple of questions here, and then that's it for the night here, gang. Okay. Brad, I hope. Okay, you asked about the ideal chart with the 200. Can I show an example of my ideal chart with the 200, or draw one that demonstrates exactly what I like to see off the bat? When it comes to 200, Brad, I just want to see that price action is close to it. That's it. In other words, that it's in play, that it's reacting to it, that there's a high or a low or a wick that's hit it today, you know, quickly. That's what I'm looking for. Yeah. So if the 200 isn't right where price action either has been very, very, very recently, or if it's not in it right now, I'll just move on. Kind of like the way we were contrasting the pound yen versus the pound US. The pound US, the 200's in play. It's right at it. See that? It's right at it. Now, contrast that to the pound yen, where it was right at it, but now it's no longer. It's launched off it. That's not in play. Yeah, does that make sense? Okay, cool. Yeah, sometimes I know my lingo and whatnot can throw you off. I hear you. So thanks for the question. I appreciate it. Okay, last question for the night. Okay, Nelson asks, when I'm talking about looking for clarity once the pair is on my watch list, what kind of clarity am I talking about? You know, Nelson, that again, it's a whole other conversation, but suffice to say, and I'll just kind of let you guys get an idea of the criteria. I call it my clarity criteria. And what I'm looking for is a wave that is smooth. In other words, the moving averages are smooth, which reflects a clean, non-volatile, kind of organized price action. So smooth waves of my 34 EMA wave, smooth lines. I'm looking for it to be established. In other words, it's been moving in that direction for some time. That's kind of subjective, but I want to know the difference between one that's just started moving up or down versus one that has been doing it for a little while, like say this 1 hour pound yen. And the last criteria is respect. In other words, if there have been corrections and prices have moved down to either the wave itself or maybe the 20 period simple moving average or bounced or corrected to that area, did the wave act as dynamic support in an uptrend or dynamic resistance in a downtrend? Again, was it respected? And that is what I call my clarity criteria. And I know we have content on that over at the YouTube channel. Okay? Clarity criteria. All right. So everyone, thank you so much for joining me. Terrific questions. Really, we could have easily had a 2.5 hour discussion here today. Easily. So I thank you for your questions. I thank you for your time. And I will see you all in our next presentation. And in the meanwhile, you can catch my analysis and the other contributors over at the Daily Forex Trading Edge, the Daily Forex Trading Edge.com. Okay? All right, everybody. Thank you again. I sincerely appreciate your time, and I hope to see you in our next presentation. Everyone take care.